Hello, thank you for joining us today for this Givers, Doers, and Thinkers webinar on the charitable tax deduction. I am John Hanna, and I'm the director of the Center for Civil Society. The Center for Civil Society is a project of AmFIL. Our mission here at the center is to strengthen America's voluntary associations by improving the effectiveness of donors, charitable foundations, and nonprofit organizations. The center fulfills its mission through education, research, publications, webinars like today, master classes, and in-person events. These resources offer practical advice, ideas, training, and tools that help civil society leaders achieve their missions. Today is March 29th, 2023. For those watching a recording at a later date, we are discussing a timely topic that includes pending legislation. Of course, the tax code changes, laws change. So certainly if you watch this at a later date, do some more research. And I should say that this discussion is educational in nature, and we are not offering financial or tax advice. As I said, a very timely topic. The charitable tax deduction has undergone a lot of changes over the past 3 years, as we will discuss today. And of course, it is tax season. As many of us finalize our own tax filings and tax returns over the next 2 weeks or so. And so this conversation should prove insightful for all taxpayers and for nonprofit fundraisers alike. I'm joined today by two expert guests. First, Howard Husak. Howard is a senior fellow in domestic policy studies at the American Enterprise Institute, where he focuses on municipal government, urban housing policy, civil society, and philanthropy. And joined by Howard is Elizabeth McWiggin. Elizabeth is the Vice President of Policy and Government Affairs at the Philanthropy Roundtable. Thank you so much, Howard and Elizabeth, for being with us today. Let's just jump right in. Question one, Howard, this might be a good question for you to sort of tackle and help us get to the bottom of this, but how did we get to where we are right now? And we can talk later in the conversation about proposed legislation or where things might go. But for listeners or webinar viewers who don't really know a lot about the history of this area of tax law or philanthropy, can you tell people how we got to where we are right now? It seems that middle-class Americans, for most of American history, did not really have an incentive to give to charity, especially if they were not itemizing, right? We're talking about non-itemizers here. But then they did have tax incentives for 2 years per some COVID era legislation, but now all of a sudden that incentive is gone again. So could you give some more context and history about how we got to this point right now?
Well, thanks so much for having me, John. And it's great to talk about a topic that's near and dear to my heart. I've written in a paper for AEI, has charitable giving become a luxury good? And I think asked and answered. And what I mean by that is that charitable giving has, over the past several years, become, at least as measured by the Internal Revenue Service, an activity that is relatively confined to the wealthiest slice of Americans. Now, in answer to your question, I'm not going to go back to the Income Tax Act of 1913 and bring us up to date step by step. That would be too much, to say the least. But I will go back to the Tax Cut and Jobs Act of 2018, which was a key piece of legislation. It was the so-called Trump tax cuts. It was hammered out with Paul Ryan when he was Speaker of the House. And the idea was simplification of the tax code. And simplification of the tax code means most people don't have to itemize their taxes. They don't have to track how much they have in interest income and mortgage interest income in state and local taxes. All of that would be simplified by a standard deduction, which amounts to about, it's changing a little bit right as we speak almost, but about $27,000 for a married couple filing jointly. Well, simplification is good, and trying to do your taxes without hiring an accountant is good. At the same time, the Tax Cuts and Jobs Act had a very significant effect, and as you put it, whatever tax incentive there was for middle-class tax giving. Prior to that, many more people itemize their taxes, upwards of 30%, and they received the chance to deduct charitable giving from their taxes. So about 78%, more than 20%, I should say, of Americans were getting this deduction. At the same time, post the Tax Cuts and Jobs Act, we have it's only the upper 10% of the population is tracking charitable giving through the IRS. They're getting a tax incentive. So it has become a luxury good. Now, as you referred to, during the COVID period, there was an additional boost for a tax deduction up to $600 for couples married filing jointly. That was time limited, though. That's gone away.
Mm-hmm.
So right now, if you believe that the tax code should support charitable giving, incentivize it, for most Americans, it's just not. And so that's what's on the table today, that question. Should the tax code be altered, reformed, whatever term you want to use, in order to incentivize giving by a broader section of the population?
Yeah, thank you so much, Howard. And for our listeners, we often refer to those COVID era tax deduction laws as above the line, because above the line is suggesting, again, if you are a non-itemizing taxpayer, that charitable deduction was, like very few things, something that was deemed worthy by Congress to be above the line to where anyone could take it. So if we say above the line tax deduction later during this discussion, people should know what we're talking about. So thanks, Howard, for getting us to where we are right now. Elizabeth, the question for you, we always hear about donor advised funds, or some people call them DAFs for short. So some people might suggest, well, if you are a non-itemizing taxpayer and you're really passionate about giving and charity, well, you can just open up a donor advised fund or a DAF and you can get tax benefits that way. Is that an acceptable answer, or why or why not might a middle-class donor want to pursue that strategy?
Sure. Well, thanks, John, and thanks for having us today as well. Now, Howard's right about the landscape and what the tax cut changes did for incentivizing middle-class giving. But I love this question because I do think that the donor advised funds are a powerful tool for givers in all income brackets. I mean, you think of their features. They have often low or no minimums to open. They make giving really convenient and easy. And they often provide research resources for individuals to help choose charities that meet their personal missions. And as research, including Howard's, has found, assets within DAFs appreciate, meaning that even the small gifts have the potential to offer significant support for charities in the long term. But hands down, the top reasons that DAFs can help close this non-itemizer gap is the fact that they do not have payout timing requirements. Mm-hmm. So this means that an individual could actually put enough into a DAF to have it make sense to itemize in the first year, and then distribute these irrevocable resources to charities over time. There's no limit to how many times an individual could contribute into a DAF and then distribute the funds on a timetable that meets their own strategy. So that's the power of DAFs. They really incentivize giving by making it easy and by allowing this bunching of donations to take advantage of the existing tax structure. And I'll say one more point on this too. This is why it's so confusing for us when we hear DAF critics talk about adding new restrictions on DAFs, forcing payouts on artificial deadlines. Those in the middle class without necessarily resources to start their own foundations or hire an army of accountants and lawyers, those are the ones who would be hurt the most by such restrictions. So if we want to encourage more giving to support the incredible charities that are hard at work in our communities, the absolute last thing lawmakers should be doing is limiting how people can give.
Great. So if a middle-class family wanted to use the donor advised fund as a tool to up their philanthropy and receive a tax deduction or incentive to do so, they would be what you called bunching, correct? So they might want to itemize 1 year out of 3 or 4 or 5 and sort of put their funding in that donor advised fund for that 1 year, itemize that 1 year, again, they really need to know the tax code, need to know the tax laws, maybe talk to an accountant. But yeah, so you're saying that they might want to do that every so many years to effectively receive the tax benefit of doing so, correct?
Right. I'm saying that's an option because
It's an
right
option.
now DAFs don't have the payout timing requirements.
Right. And that could be a whole separate webinar, of course, about whether or not DAFs should have payout requirements. And we can talk about that maybe at some point. That'd be a great discussion. Okay, next question. So we know how we got to where we are right now. Again, throughout most of American history, itemized or non-itemizing taxpayers really haven't had deduction abilities. They did for 2 years during COVID. Then it wasn't renewed. It was sort of taken away. It's kind of odd that, in American tax law that tax incentives are taken away. Usually once we get them, they kind of stick around for the most part. So what are the proposed legislative fixes right now? So it always seemed to me that one option would be simply to renew the $600 above the line deduction for a couple filing jointly, or the $300 for an individual. So that certainly could be one possibility. And that, of course, again, would mean that any taxpayer at the federal level would claim a tax deduction, whether you itemized or not. But beyond that, what else has been proposed? I know that you've been following some recent legislation, Elizabeth. Can you talk about that?
Sure, absolutely. I'll say you're right. There's always the chance to extend the expired tax benefits. But even more exciting is the Charitable Act, which was recently introduced by Senators Langford and Coons. And this is a great targeted approach to incentivizing charitable giving. This bipartisan bill would expand and extend into 2023, 2024, that expired deduction for non-itemizers who donate to charities. So whereas the prior deduction was capped at $300 or $600, this new version would actually allow a deduction of up to 1/3 the standard deduction.
Wow.
So this translates to about $4,500 for individuals or $9,000 for married joint filers. And the higher threshold here really is important. Data from the Fundraising Effectiveness Project found a nearly 30% increase in $300 gifts in response to the earlier $300 deduction. So raising the value of the deduction really can be expected to help drive behavior toward an increase in giving amounts. So that higher allowable deduction is great for encouraging giving. But I also want to note that this bill includes donor advised fund contributions, and these were missing in some of the earlier iterations. By allowing the DAF gifts to be eligible for deduction, the bill appropriately acknowledges the key role that DAFs help to play in this landscape.
Great. And just for people watching who know very little about the tax deductions, but might have claimed an above the line deduction the last 2 years. So as people are possibly now filing their tax claim for 2022, am I correct that there is no tax deduction for above the line non-itemizing taxpayers? So this could be a surprise to some people, because for the last 2 years, they might have logged into TurboTax or a software platform and done their taxes. And then there might have been a pop-up question that said, did you contribute to charity? And they might have said, oh yeah, I did. And they might have seen their taxable income go down by $300 or $600, depending upon their marital status. So for this year that they're filing right now for, again, the 2022 tax year, am I right in that there is no charitable tax deduction?
You're right that it did expire. And that's why this bill, takes effect this tax year. So it's 2023 and 2024 is what it would extend to.
Yeah, great. Howard, any thoughts on that? What seems like a very generous, as someone who studies this policy quite a bit, seems like a very generous proposal for legislation. Elizabeth saying 1/3 the amount of the standard deduction, which, is a pretty massive amount. Any thoughts about that, Howard?
Well, it'll certainly help us claw back to where we were prior to the Tax Cut and Jobs Act, when at that point, 78% of people did not itemize or itemized. What am I getting wrong here? 22% itemized versus now it's only about 10%.
Yeah, I've heard recent stats as low as 9% of people itemizing. Of course, there's different reports that suggest different things, but yeah.
Right, so that absolutely right. The incentive that was there has dissipated, although Elizabeth is right that you can use the donor advised fund as what amounts to a workaround. But in terms of the Coons-Langford bill, I'm all for civil society. But it's a little, I'll just put on a prognosticator's hat. It's a little hard to imagine a bill that generous getting through. And would it make more sense for us to go the tax credit route, also above the line?
So Howard, could you talk to our viewers who, again, maybe aren't very tax savvy? What's the difference between a tax deduction and a tax credit, and how does it all work out when they actually go to file their taxes? And what does it mean for their philanthropy if they're a middle-class donor making a gift of, $500 a year to the food bank or the soup kitchen? What's the tax credit idea here?
Well, let's assume that even though there might be an effective $9,500 ceiling on how much you could claim as an above the line deduction under this new bill, let's assume that many people of modest means are not going to be able to contribute that much.
Right.
More likely to contribute the $500 or $600 figure that you just mentioned. So a tax credit reduces your taxes. You compute your taxes, then you take the tax credit, and your taxes dollar for dollar are reduced. A tax deduction, in contrast, reduces your taxable income. So the effect of that is to put you conceivably in a lower tax bracket if you're taking the standard deduction. The effect of that may not be as remunerative for you as a dollar for dollar tax credit. It's indirect, one way of putting it. And a $500 tax credit might be clearer for the typical taxpayer and not have that kind of sticker shock that goes along with that large figure. And now, if Senator Coons and Senator Langford can convince the Congress to do that, well, I'm all for it.
Great. Before the next question, Elizabeth, any thoughts on the tax credit route as opposed to the generous standard deduction amount?
Yeah, I think right now, obviously, we support the Charitable Act because there is a bill. It is in Congress. They're considering it. I think there are no bad ideas when it comes to encouraging charitable giving by lowering the cost of giving. If Howard can get that bill introduced, I'd love to see it. I'll say that.
Second. Great. I'll just remind people who are watching, if you have questions for Howard and Elizabeth, go ahead and drop those in the question and answer portal, and we'll try to get to those at the end. Next question that I had, this is probably, I think that you want to talk about this today, Elizabeth, but some people are talking about or suggesting that the charitable deduction should be abolished completely, kind of a radical draconian measure in my mind, but they're suggesting that all taxpayers, whether you itemize or not, there should be no tax deduction, certainly no tax credit. And, there's plenty to criticize when it comes to big philanthropy, plenty to criticize when some 501c3s do certain things, and that could be a whole different conversation. But what do you think about the idea of abolishing, tax incentives completely for all American taxpayers? What does that mean for America and for civil society?
No, this is a great question, John. I'd say, look, we all want to see more money going to charities and the communities and causes that they serve. Ending the charitable deduction would send us down the opposite path. So, I can get into why this is the wrong policy for encouraging giving. But before that, I'd like to just quickly mention where we see this sort of theme coming from. And this, the call to end the deduction can be seen as part of a broader uptick in populist or anti-elite sentiments. We hear from voices on both the left and the right as they're arguing that philanthropy is a hobby of the wealthy and that individuals should not even be able to decide what counts as a charity. And some of this indicates what we see as a growing desire to use the government to silence the givers that one disagrees with. Like what the Ford Foundation is doing, for example, shut them down, take away their tax exempt status. And at the roundtable, we disagree with this. We think there is ample room for disagreement on solutions. And that's why we need more voluntary activity and more charitable giving to a broad range of causes, not less. So just getting back to the idea that ending the charitable deduction will somehow free the charitable sector from big players or even even out the playing field for smaller donors, I would argue this is just plain wrong. What these critics miss is that the charitable tax deduction is at its core an acknowledgement that when somebody gives away income, you can no longer consume it for personal use. So you shouldn't be taxed on it. And I would say this is an important facet of the debate about the deduction's value and its role in promoting charitable giving. It is a shield against the government involvement in civil society. Now, where it falls short, as you mentioned, John, in our current tax code, does speak to the need to expand and enhance the deduction, not to take it away altogether. Now, if you don't mind, I'd like to call out one of the critics to use just as a quick example here. So in a recent Giving Review symposium, Jeffrey Kane argues in favor of ending the charitable deduction because he says it only helps big philanthropy and it has essentially pulled America away from the Tocquevillian ideal of the past. And one of the most confusing parts of his article is that he puts billionaire John Arnold up on a pedestal for proposing some of the policy changes we saw in the last Congress, which would, in short, impose restrictions on giving vehicles like DAFs. And I think it's absurd to argue that in order to encourage more giving, we should make giving harder and less appealing. Plus, the approach proposed by Arnold's initiative wouldn't hurt the largest foundations or LLCs like his, or any other type of giving vehicle in the big philanthropy category. Rather, imposing the one-size-fits-all approaches will hurt the smaller givers that, as Kane himself notes, don't have the same tax accountants, philanthropic advisors, and lawyers on hand. So even for those who don't like big philanthropy, restricting how smaller foundations, donor-advised funds give will only lead to further atrophy of individual action, voluntary association, and the sort of robust civil society that we all want. And finally, this might be controversial, but I'll just add in a quick defense of some of the larger philanthropic entities. I would argue these are some of our best defense against swollen and bloated central government. Big philanthropists, they've chosen to give away some of their wealth. They don't do this because they have to. They don't do it for the discounted taxes that still leaves them with less than if they had just kept their money and paid taxes on it. These are, by and large, generous Americans with a passion for improving our world. Many of them make mistakes and take misguided approaches to solving the problems of our time. But taken as a whole, I would argue we benefit more from their creativity, nimbleness, and their freedom to exist on a timetable that makes the most for their mission. So just to wrap up my very long-winded answer here, it's a terrible idea to end the charitable tax deduction.
Great. Howard, do you have any thoughts on completely abolishing all tax incentives or deductions for charity? I'm guessing it's probably a no from you, but any thoughts?
Well, there's a lot to chew on, though. And
Yeah.
I think we really we owe it to the proponents of that idea to chew it over.
Yeah.
First of all, it's not unexpected when a smaller and smaller slice of Americans avail themselves of the charitable tax deduction, then we should expect it to be viewed as an elite activity, because it has become an elite activity in terms of availing ourselves of the deduction. We don't really know, and we can only estimate how much Americans are giving without the tax deduction. There's no way to track that. And it's quite possible that without the tax deduction, people would still be donating to their local churches, synagogues, and mosques, and boys and girls clubs. So it's not out of the question that would continue. At the same time, do we really want to roll the dice on this? That becomes the question.
Yeah.
We want to roll the dice on vastly disincentivizing charitable giving. By the way, I think there is another argument. I'll just speak against myself now. I'm going back and forth. The deduction is open, and we have to be very wary of this if we want to maintain the deduction, and I do, but we have to be wary against clause being put into it, by which I mean, well, there's only some things that are truly charitable. Direct help for the needy, one person's or one group's definition of what is charitable. If we attach these kind of definitions to the charitable deduction, then, as for instance, Robert Reich of Stanford has proposed, he thinks that churches and synagogues are nothing but clubs and that they don't deserve the charitable deduction. Well, if that kind of a view gets an audience on Capitol Hill and we see restrictions on what qualifies for the tax deduction, well, then I think we would have to start as a sector to consider stepping away from it. But at present, that's a threat on the horizon, not anything that's looming immediately. And so I think at present, it would be a disastrous roll of the dice to do away with the deduction altogether.
Great. And that does lead me to one question in the question and answer portal right now. So someone is asking, would tax credits apply to charitable gifts to religious entities? And so I think it's safe to assume that right now the answer to that would be yes, because a church or a mosque or a synagogue is certainly a 501c3 unless it's taken away from them for some reason. But clearly right now, if someone's giving to charity, whether they're taking an itemized deduction, or if in some point the above the line deduction is renewed, certainly churches count, right? Just so our person is clear about that.
Yeah, that's a definite yes, and
Yep.
it's important beyond just answering that narrowly. One of my own big concerns that I've expressed about in this concept of is charitable giving become a luxury good. It's not only that it's confined to the wealthy, it's more likely for the wealthy to, as any of us do, care about their own immediate surroundings and causes. And so civil society is being hollowed out to the detriment of America in poorer neighborhoods. And so if those who are contributing to inner city churches could get a bigger boost through a tax credit, that would be transparent. The deduction, the bunching of items of DAF contributions, all fine, but they're hard to follow for the average person. A simple tax credit, because you gave $500 to your church, would be much more straightforward and conceivably boost civil society in areas where they have been losing numbers, not just of donors, but of actual organizations.
Yeah. Well, that's a good segue for a question that I actually had for you, Howard. So in a recent article in The Hill, you talked about increasing tax incentives for charitable gifts that impact specific zip codes. So can you just give some more context about maybe how that would work, and who gets to determine which zip codes are sort of worthy of the benefit for the taxpayer to get the deduction, or have you thought it that far through yet?
Well, it's of a piece with what I was just saying. I mean, if in a broad brush way, you would look at low income zip codes.
Okay.
And in my civil society or is charitable giving a luxury good paper, I looked not only at who is giving, but the diminishment of civil society organizations in low income zip codes, which is it's a very serious problem, because if we care about reducing drug addiction, if we care about reducing crime and violence, we're not going to do that, as I argued in my 2019 book, Who Killed Civil Society. We're not going to do that just by having government programs that counsel people. We need values imbuing organizations in lower income neighborhoods throughout our society, not just but certainly in lower income neighborhoods. And to the extent that those have fallen away and could be supported by a tax credit that was enhanced if you were a resident or a giver to a lower income zip code, I think that would be beneficial.
Great. Another question that I had, and this can be for both of you. I live in the Midwest. I live in flyover country. You're both more involved in the Beltway, but it would seem to me at first glance that expanding charitable tax deductions to the middle class, whether we're talking about above the line deduction or a tax credit, however you do it, it seems to me that should be pretty nonpartisan, bipartisan. It should be a win for everyone, right? That I would think and I would hope that would have no problem becoming law, regardless of which party controls which chambers of Congress or the White House. And so can you maybe give some context about exactly first why Congress failed maybe to renew the above the line deduction for 2022, if you have any thoughts about that. But then could you also both talk about, is this clearly an ideological question? Is it that one side of the aisle prefers this over the other? Is it maybe more of a regional thing? Again, it seems to me that this should be happening. Elizabeth, can you go first and talk about that for a moment?
Yeah, sure. I'd say I don't think there's necessarily an ideological divide. As I mentioned before, even some of the critics of the charitable deduction really come from both sides of the aisle. I would say, Congress is busy, and sadly, this didn't rise to the urgency level of, funding the war in Ukraine or some of the misguided attempts to reduce inflation. It also does cost money on the budget basis in foregone taxes as taxpayers give money away to charities. An earlier iteration of this proposal had a price tag of about $3 billion a year. But we do need to make sure we're fostering that sense of urgency. And that's why the roundtable is joined with many other organizations in the charitable sector to vocally support the Charitable Act. We see that there is a need to make this strong and clear case to Congress that this is an important way to increase giving across the board and why that's important. And I, say on the same lines, I hope the sector can stay united on this and against the threats to giving on the other side. Like the proposals in Biden's budget that would have restricted how private foundations use staffs or how family foundations can count the expenses of working family members, for example. So the Charitable Act is great, and we need to keep pushing for its passage. But we also need to unite around the threats that are out there to philanthropic freedom as well. If our end goal is really to help foster charitable giving.
Great. Howard, anything to add about that? Is it just there's just too much going on in the Capitol and it's just not that important enough to happen, or any more thoughts?
Well, a lot of COVID era initiatives expired, and I think it fell victim to being a COVID era initiative. At the same time, I can imagine, I agree with Elizabeth that it is not a strictly partisan issue, but I can imagine those who favor tax code simplicity being concerned about the above the line deduction, because we in this group are boosters of charitable giving, but there are boosters of many things. And if it were to open the door, I'm just imagining, Senator Paul, somebody who's on the libertarian side, right, who would be a fan of civil society, who might see this as the nose in the tent of a whole series of new above the line deductions that would then complexify the tax code. So there's going to have to be an effort to say, well, no, that's not where this is going. And this is fundamentally different from other quote unquote special interests, potential deductions.
Right. Question from the question and answer portal here. Someone's asking for the above the line tax deduction for the 2 years where non-itemizers had that benefit. Were they required to prove through either a tax receipt or something that they gave their money to a charity, or was it more of a check the box? I believe it was a check the box, that it was just a sort of an honor system kind of thing. But Elizabeth, do you happen to know?
I don't have the exact answer. I agree. I also think it was a check the box sort of issue where in the past, when you itemize, you keep your receipts and then you're able to prove it after the fact. But I'm not aware if you were supposed to submit anything with your tax return.
Right. To my knowledge, you did not need to submit any kind of tax receipt or verification. Great. Another question I had from the question and answer. Any relevant laws as far as the state level that either of you happen to know about? If someone's in a specific state, are some states maybe doing things that are generous to taxpayers on the state income tax side more so than others, if that's an area that you've been exploring at all. Any thoughts, Elizabeth?
Yeah, we recently released a paper on the 50 state costs of complying with charitable sector regulations. And this is one of the indicators that we included in our ranking of states. And, it's not the only thing that matters, but it's certainly not helpful when a state does not allow deduction on state income taxes.
Yeah.
Pennsylvania, which is our worst ranked state in terms of the burden on charities specifically, doesn't allow for a deduction. And it also makes it really difficult for charities to be tax exempt from state taxes as well. To Howard's earlier point, this is a state where the government has to decide what's a pure charity, which of the C3 organizations are exempt from state tax. And that's a really concerning slippery slope, if you will.
Yeah. Another question that I had. So what's the danger of the status quo? So if nothing gets done, if there's no new legislation, and if the non-itemizing taxpayers, continue to get no recognition or tax benefit. So what's the danger of that status quo? Again, if only taxpayers who itemize get a tax benefit. I know that you write about this a lot, Howard. Where do those philanthropic dollars go? I imagine that, probably more the arts, culture, maybe even higher education receive a lot of those dollars. And maybe we could also talk about where those dollars not go. Do you have any thoughts about that, Howard?
Well, I do. And I think that would be a dangerous thing for America if charitable giving were seen, and in reality was being incentivized only for those at the upper tier of the income groups. And by the way, that also means New York, California, and blue states, which disproportionately benefit because they are the most affluent places, and their tax incentives are being enjoyed by wealthy donors. And so in effect, there'll be a fatter and fatter target, to your question, on the charitable deduction if the status quo is allowed to continue.
Great. Elizabeth, any thoughts from you on this question?
Yeah, I agree. There are, concerns that people have with the status quo. And, we already talked about the Charitable Act, for example, and solutions to address that. But overall, I do question the premise that there's something wrong with how itemizers give to charities. I think we need more giving across the board. And when we're punishing or vilifying the wealthy givers, it's not going to help support the most vulnerable in our communities. And it's not going to magically convince the non-itemizers to step up in an even bigger way and support charities. So when we talk about that status quo, I just think there's a bigger danger in enacting policy changes just because it's been a while without carefully considering what some of the long-term consequences will be. As we know, anything imposed on the big guys will inevitably hurt the little guys even more and restrict charitable giving in harmful ways. So I think the real question, and I don't have an answer to this, is how do we address the actual problems? I mean, Howard talked about the cultural changes and the cultural shifts, and a recent Wall Street Journal poll found a decline in people identifying with traditional American values like patriotism, like being involved in one's community. So that's not a good sign for charitable giving. We have people on the left and the right that argue charitable giving is just tax avoidance by the wealthy. That's not helpful for charitable giving. So I don't have the solutions to some of these broader cultural challenges at play, but I would argue that punishing those who do give is not the answer.
Great. Yeah. Last question. And you sort of alluded to this earlier, Elizabeth, but during those 2 years when every American taxpayer had at least some tax benefit to give to charity, even though for some it was kind of small, did we notice any uptick in charitable giving or any changes in where those dollars go? Any insights or things that either of you have noticed? We can start with you, Elizabeth.
Yeah, I mean, I think overall we've seen modest increases in charitable giving, over the last few years. I think you saw an incredible response to COVID relief, obviously. And, when it comes to how these happened in response to the specific tax benefits. We know in 2020, Congress enacted the 300 deduction and extended it through 2021 at the increased cap for 600 for joint filers. And those are the values of gifts that saw the significant increase. So I think you really saw people reacting to the benefits that were there.
That could be a great fundraising strategy for nonprofits if we do get those above the line deductions back, to ask people for that $300 or that $600 if people can max out, so to speak, what might be, again, at some point they're above the line deduction. Howard, any insights from you about things that you've seen change as far as the 2 years of COVID era legislation? Did you notice anything or read about philanthropy changing or any kind of uptick over those 2 years?
Well, one thing I think we have to keep in mind, it's important to not penalize people for their charitable giving by not letting it ameliorate their tax burden. At the same time, I think one of the big stories of COVID was how people stepped up through voluntary action. And that remains an important part of the cultural DNA of America. We should be reassured by this, whether it was the World Food Kitchen or people just bringing meals to shut-ins who didn't want to risk going outside because they were elderly. A lot of that happened. A lot of that is not recorded. It's informal, and that is the Tocquevillian beating heart of America. And apart from this incentive and that incentive, we shouldn't lose sight of that.
Yeah, that reminds me of a paper that I authored in Philanthropy Daily once about suggesting that we should give people a tax deduction for their time volunteered at nonprofits. So that might be farther than some people would like to go, but probably maybe also worth exploring at some point. That's all I had for today. Let me promote one future event for us here at AmPhil and the Center for Civil Society. We will be hosting our third Givers, Doers, and Thinkers Conference in Scottsdale, Arizona, this November 7th and 8th at the W Hotel. Join us as we discuss the rise of the nuns and how declining religious affiliation is impacting American civil society. So we will explore what declining religious affiliation means for local charity, for education, and other aspects of public life, and what philanthropists and nonprofit leaders are doing and could do in response. So again, the conference will begin on the evening of November 7th with a welcome reception, and then continue with the full day of panels and discussions on November 8th. Our keynote speaker will be Mary Eberstadt. We are so thrilled to have her with us. You can read more details and register by going to AmPhil, that's AMPHIL.com, and clicking on the events dropdown. We'd love to see you there. Thanks again to everyone for joining us today for the webinar. And thank you so much, Howard and Elizabeth, for your time. It was a great discussion and we really appreciate it.